Hey everybody, it is your favorite managing broker here, and I'm joined today by MRich again of Braun and Rich. And what are we going to be talking about today? Well, there's two things that we always have to face in life, and that's death and taxes. And let's face it, I don't want to talk about death. So we're going to talk about taxes today, and specifically Cook County taxes. And we're going to be talking about how you can provide value to your clients, not just during a transaction, but also after a transaction. And we're going to walk you through some very valuable information so you understand truly how property taxes work and how you can provide value to your clients. So Matt, I will let you take it away.
Yeah, Paul, thanks for having me again. Tax bills just came out. Probably some confusion on why my bill is what it is. Maybe there's confusion in general about how the county deals with bills. I thought I would just touch on some kind of Cook County 101 points today. So always feel free to reach out to me with any follow-up questions. I'm happy to answer them. But bills just came out a couple weeks ago, and our office has been busy dealing with that. Bills come out twice a year. In Cook County, they are paid in 2 installments, but unlike Lake or DuPage or Will, they're not paid in 2 equal installments. The first installment for taxes in Cook County are due around March 1st, and they are always 55% of the prior year's bills. So as of today, if you live in Cook County or own a home property in Cook County with a Cook County bill, you can figure out what that March 1st bill is going to be. You simply take the total for 2021 and multiply it by 55%, and you can 100% know with accuracy what that bill is going to be. Helps for saving, helps for planning. It's not a bad thing. The unique thing that we have in Cook County that's very different, though, from others is that by not being equal, we don't know what the second installment is going to be. So the second installment is typically due around August 1st. And that's where you're going to see all the new variables that create the tax bill and whether your exemptions like the homeowners or the seniors or even a senior freeze has been applied. So you kind of have to wait 6 months sometimes to find out what your bill is going to look like. On one hand, it's a benefit because you have 6 months to prep and prepare for your taxes. In Lake and Will, you're usually looking at June and September payments. So they're right on top of each other. But here you have 6 months. The bad part is you just don't know what the bill is going to be. So the bill, in my head, and the way I think of it, is made up of 2 things. And the county kind of agrees with me. The bill, it represents what the county needs. So if you look at this paragraph 4, you'll see the county basically says, we need this to operate. So this is going to be factored into your bill. However, that's not the only thing. Obviously, the assessed value, and we're going to talk about that in a little bit, also comprises the bill. So let's just talk about a bill and what you're looking at if you have a Cook County bill today. So when you are calculating a bill, it looks very unusual. And if you see the bottom left of your tax bill, you're going to be looking at what we're looking at right now. The bill is comprised of 3 elements. It's got the assessed value, it's got something called the state equalizer, and then it's got the local tax rate. The assessed value is created by the county using a whole bunch of factors, and it is not supposed to be based on purchase price of the home you just bought. It's supposed to be based on different values of homes, different features and characteristics of other homes that are similar in the area. So that's why somebody who maybe paid more and has a lower value can keep on appealing, because it's based on other things and other factors unrelated necessarily to the purchase price. So we get a value that the county tells us on the top left of this picture. And then the county says, look, we got to bring all these values down to a certain level so we can start calculating the bill. If you own a residential property, we're going to take that value we've given it and multiply it by 10%. If you own a commercial property, we're going to take that value and we're going to multiply it by 25%. So commercial properties, you're looking at higher tax bills. For example, I'm doing a closing right now. The bill's $180,000. I'm sorry, the home is the commercial property is $180,000. It's got a $13,000 tax bill, and that's in the
Wow,
city.
that's a huge difference.
Huge difference than a residential property where that probably is a $6,000, $7,000 bill at most. But here we knock it down. We say, okay, it's residential, so we're going to take 10% of that market value, and we're going to start our calculations. The Illinois comes out with a state equalizer across the board. This is how we're going to multiply. This year it's 3.0227. And then each municipality and each township within the municipality says, this is our tax rate. This is what we need to operate. 6.719% in Jefferson County, Jefferson Township in this particular case. So this particular neighbor of mine has a value of 700 from the county and now is looking at a bill of 14,122. If you look at the bottom right, she did not apply for the homeowner's exemption. She's entitled to that. So think about that. That's another $700 or $800 that she could be reducing her bill by. Is she lost because she doesn't have it here? No. She can go back to the county and apply for a certificate of error and get a reimbursement from the county. So this is kind of a basic tax bill. It's super wordy. It's super complex with numbers. But in the end, you're taking what the county says your value is, and then ultimately what the county needs, and that's where we come up with your tax bill. It's not over there. If you've got an assessment that's a problem, there's ways to kind of combat that. You can appeal your assessment. So I want to show you what happened in 2021, because it was a doozy of a year for taxes. Why? Because 2020, they gave all these values based on COVID. They were reduced artificially to help people with COVID. Then in 2021, we go back to normal values. And on top of that, we add in the Chicago triennial reassessment. Every 3 years, the Chicago properties are reassessed. So on top of the increase from COVID, now we're looking at crazy increases based on the triennial. So here is a Wicker Park property on the top. In 2020, the COVID value, and so you understand, I believe it sold for $675,000. In 2020, you'll see my mouse, the county brought it down to 511 with a market rate of 511. So we started calculating that tax bill at $51,000. Remember, we multiplied it by 10%. However, look at 2021, it almost doubled. So somebody who owns a kind of a standard condo in Wicker Park is now looking at almost double. So here is a perfect time for you to add value as an agent. How? Look up the property on the assessor's website. You're now looking at this market value from the year before to the year now, and you can tell your buyer, hey, before we get into it, that bill of $7,000 may not be your bill in 2021 payable in 2022. It's a really nice way of not having to be an attorney, not having to be a tax pro, but just adding one fine point to the deal to give them a heads up, not to discourage them from the deal, but also just to show, hey, this is just a starting place, may not be the end result, because look what happened here. They did appeal, and it went from this $913,000 market value to a value of $685,000. And you see 68,000 because they always multiply it by 10%. So this particular property ended up by the purchase price. It's a great way to add value. It's a great thing to know how to use the Cook County Assessor's website and what you're looking at. Here, it goes from value before to value now. And again, on this slide, which I'll make available to you, Paul, you can understand, I took this directly from the county, what they are looking at and for value purposes. And there are calendars on when you can appeal. So this, again, the assessment calendar is on the county website. It will tell you all the dates that you can go ahead and appeal. You don't want to do it by yourself. You want to hire a tax appeal attorney. We don't do that, but there are tons of great tax appeal attorneys who do that. And it's a great way to make sure that you have a professional opinion on whether you should appeal, because you don't want to raise red flags if you do it yourself. I know a lot of people appeal on their own, so that's why I'm kind of doing this warning, always hire an attorney. Brings me kind of to what we're dealing with now. Taxes for 2021 second installment are out. Another great way you can add value is reminding your clients about tax reprorations. If you sold a property in 2021 or 2022, you were just looking at that slide probably, or your attorney was, and saying, we got to deal with taxes a different way. It cannot be final at the closing. I got to make sure that my buyer or even my seller doesn't get screwed and pay more than they should or get less than they should. So if you had a client in 2021 or 2022 before the bill just came out, it is a great opportunity to revisit your files, check the settlement statement or check what happened during attorney review and say, okay, did we do a reproration? We did. Let's remind our client to touch base with their attorney and get the money they're supposed to, or, discuss what their options are if they were holding money. Something to consider. I know that's a lot of info real quick off the bat, but that's basically what you're looking at with taxes right now, how they're broken down, where the value is, and what you can do right now with your clients.
Yeah, that makes great sense. Ironically, my attorney just called me the other day to remind me that when I bought my place back in April, we actually did not do tax preparation, and I actually wound up ahead by over $4,000
Oh, wow.
because of that. But the seller obviously wound up behind by $4,000 because of that. So it
Right.
worked in my favor, thankfully. But this is a great point that
But
I think a lot of brokers are not familiar with.
to your point, that's where you want your attorney or your professional to say, hey, and you had a win in that situation, but a lot of people didn't. And I'm dealing
Exactly.
with a lot of reprorations right now of like $18,000, $10,000, $20,000, money that we're holding that we have to deal with. You just want to touch base with your attorney before the process starts and say, hey, can you help me work through taxes, or let's talk to the client about taxes. Do we need to reprorate? For Chicago properties right now, hopefully a lot of them are in the clear. We've gone through the triennial, that's over. COVID, kind of readjustment has happened. So the 2022 values and the 2023 values hopefully are going to stay consistent. But, if you buy a new home or if your neighborhood is changing, like in my neighborhood, there are 9 new construction homes across the street. It's great for me. It's bad for taxes. And I can expect that next year, even though it's not a triennial year, I could be facing an increase in taxes. So always talk to a tax professional and always look on the treasurer's website and the assessor's website on the information. And if you don't know what you're looking at, always reach out.
Makes sense. Now, I want to touch base really quickly on TBD. So,
Yes.
we go back a few years ago, and TBD was kind of rarely used when we were talking about taxes. Now it's being used a lot. So, how often are you seeing it in purchase contracts that you're dealing with?
I am seeing it almost. Let's say it's Cook County, Chicago property, obviously Cook County. I'm seeing it in hopefully 90% of the contracts. And when I see it as anything but TBD, I have heartburn, particularly the last 24 months, because here's why you want to do TBD versus 110%. One, let your attorney figure it out. Take one less thing that you have to deal with off of your plate and let the attorney figure it out. Two, if you put 110% in and you submit that offer to a seller who knows that the value of their property, just like in the slide before, has doubled, they're going to take that 110. And when your attorney goes back during attorney review to say, hey, 110 is not going to cut it, your seller may say, look, we took that offer. It was a material term to us. So even though you can modify it during attorney review, we're not going to modify it. That was something that we thought was fair given the price that we gave you, some kind of argument like that. So for your agents, for when you talk to contract and completions and negotiations, TBD, whether it's Cook County, Will County, Lake County, always TBD.
Yep, great advice. All right, Matt, so tax prorations. This is something that I know a lot of agents sometimes struggle with explaining to their clients, mainly because we understand it very well. We understand it almost like a language, and just explaining it to a client that never deals with it sometimes can be a bit difficult. So if you can break it down and explain it to me as if I was a child or a golden retriever,
it's a
what is
really
that
good
explanation?
point. I think of in preparation for this, I like almost just, it's like a second language that I'm used to, and I forget that others aren't. So let's just talk about taxes again, as simple as possible. If you are looking at a $10,000 tax bill, it's going to be TBD in the contract, like we've discussed, but you're going to need a credit because taxes are paid backwards. So I'm going to pretend like you're my client and I'm explaining it to you. And this is your first home. So when it comes to taxes, Paul, they're paid backwards. So the 2022 taxes are going to get paid in 2023. The seller is going to be long gone when those tax bills come out. When they realize what they need for that tax year of 2022 that gets paid in 2023, you'll have owned the property and the seller will be in Costa Rica or wherever they are at that point. So what do? Well, you've got to get a credit at the closing. You've got to get a credit for the time period that they own the property for the year of the closing. So if, let's say we close tomorrow, we need a credit from January 1st to tomorrow for that period, because that tax period won't be billed until next year and they'll be gone. So what we'll do is we'll get a credit at the closing, and we'll be asking during attorney review for an appropriate credit based typically on the last tax bill. So we'll look at the most recent tax bill, the most recent information that we have. We'll say, okay, we know that typically the taxes are going to go up. So we add 10%. That's why you see 110%, or we add 15%. So that's why you see 115%. We multiply our last bill, the full year, that $10,000 by 110%, we get an extra $1,000, and then we prorate it from January 1st to the closing, and that should be your credit. Most of the time, it works out. You get enough money. A lot of times, like we've talked about with the triennial reassessment or COVID situations, you are reprorating, you're putting money aside for making sure when the bill comes out, when the seller's long gone next year, that we have enough money. Does that help explain it?
That is perfect, because it is one of those things we always do struggle a bit with explaining to clients. So thank you very much for that, Matt. I really appreciate it. I know taxes are not always a fun thing for us to talk about with our clients.
Not at all.
But it's a necessary thing to talk about. It is a necessary evil, for the lack of a better term. And it is something that I guarantee you all of your clients are thinking about in the back of their heads, because it is in the media a lot, especially right now. So we want to make sure we are able to properly explain it to our clients to make them feel comfortable.
And one more thing, and then I'll stop. It's also necessary to talk to them about it because it will affect how much money they have to bring to the closing. A lot of times they're getting estimates, they're trying to figure out their numbers, and it's helpful to give them as an agent some, I mean, if you're giving them a cheat sheet for the closing on how much they have to bring, sometimes agents do that. It's a good thing to know and kind of get a feel for what they may get.
Yeah, that's a great point. Great point. So some great tips for you to go ahead and walk away with today. Save this video so you can go back to it 2 months from now, 4 months from now, before you're having these conversations with your clients. You can always go ahead, quickly watch this and review it so you can sound like the expert that you are. You will have Matt's information at the bottom of this video as well as in this email. And again, for any tax questions, feel free to reach out to me, reach out to your attorney, reach out to Matt, and make sure you're representing your clients as best as possible. So thank you, Matt, again for joining us today, providing us this info.
Appreciate it. Have a great day.
You too.